Ernie, looking at the index for the San Joaquin Valley, it looks like it's up again slightly, but it's up.
It is up, Cindy, and it's above growth neutral for the month of October. The businesses that we survey here at the Craig School of Business at Fresno State, the overall index, the leading economic indicator, is pointing to growth, but boy, it's a slow rate of growth. But it is sufficient to bring the unemployment rate down, but that bringing down the unemployment rate in the four-county area is going to be very slow. In other words, we're going to continue to see elevated unemployment rates, but again, the unemployment rate is likely to come down. Job growth is still below 1% annualized. We need to see job growth at least double that to really bring that down the unemployment rate for the four-county area, the Fresno metropolitan area, what we call the San Joaquin Valley.
But we're looking at imports and exports. Trade numbers aren't as good as they should be.
Trade numbers have not been good. Of course, that's important for the four-county area. Exports very weak. Imports also weak in the sense that businesses really aren't buying significantly from abroad. And of course, that's just because their businesses are not growing at the rate we'd like to see. But that aside, the number at least was up for the month. We are seeing, for example, food processing doing quite well. Housing, anything related to housing, doing pretty good. We're tracking probably housing growth, price growth, above 10% for the four-county area, so that's good. We're not seeing the housing growth or the construction activity we'd like to see, but it is up, not back to pre-recession levels. We're seeing the overall economy moving forward. Again, job growth not as good as we'd like to see. And we ask about the federal shutdown and the impacts. Only about 11% of the businesses reported negative impacts from the shutdown. Of course, that leaves 89% saying no impacts, at least as to their businesses for the federal shutdown. But of course, it was disruptive. There were some businesses that did report some negative impacts, and of course, those particularly with close ties to the federal government, that they did have some impacts. But I think in the weeks and months ahead, we'll see that reversed as long as we don't have another shutdown, as long as the Congress raises the debt ceiling. I expect the San Joaquin Valley economy to move forward, and moving forward at a slow pace, but it is positive. 11th straight month that we've recorded a leading economic indicator above growth neutral, so it was reasonably positive.
What about the lack of a farm bill? Does that impact the San Joaquin Valley?
It always does when you have this uncertainty surrounding agricultural support, and of course we've got issues related to the environment, and the environment of course is connected to the farming sector, the agricultural sector. The lack of a farm bill certainly has some impacts, and of course we've got Congress tied up with the food stamps, the SNAP program versus the farm bill. We've had 1 year now of a temporary farm bill. We need to see a five-year farm bill to provide some certainty. And for the businesses that we survey that are connected or linked to agriculture is very important. So that I think we're going to see a farm bill. We'll see it moving through Congress, signed by the president hopefully before the end of the year, and that'll be a real positive. In terms of looking at the sequestration, the federal spending sequestration, those debates, those deliberations that are going on are quite important. We got 3/4 of the business that we survey in the San Joaquin Valley reported no impacts at this point in time from federal spending sequestration, which means, of course, 1/4 of the businesses did report some negative fallout from the federal spending sequestration. So that's another issue that's facing many of the businesses that we're surveying in the San Joaquin Valley here at the Craig School of Business.
What else? How would you summarize the report?
Well, I think to summarize, the numbers are looking better, just not as strong as we'd like to see. Manufacturing still not adding a lot of jobs, but the manufacturers in the four-county area are growing their output via higher productivity, via increased hours worked for their current employees. We're likely to see that continuing into 2014, and I think if we get a kickstart from the a federal government that at least provides some certainty in terms of legislation, in terms of the spending policies, in terms of the taxing policies, because we do hear hints of an increases in taxation, and that's not what businesses want to hear. In terms of prices, we're continuing to see not much inflationary pressures. However, the Federal Reserve's QE3 policies, that is putting some air into some of these price bubbles. Now, that would be price bubbles in terms of agricultural land. That would be price bubbles in terms of certain commodities, not agricultural commodities. Agricultural commodity prices have come down a bit this year, but we are seeing that for certain commodities, and of course that has some impacts on the businesses, but also on consumers. I'd like to see, at least for my money, I'd like to see the Federal Reserve move away, at least begin to taper QE3. Are they going to do that? No. They will not begin tapering, in my judgment, till the second quarter of 2014, which means that those businesses, those consumers out there can count on low interest rates well into 2014. Now, interest rates are going to be rising a bit, but they're still going to be low by historical standards, so we're going to see good mortgage rates, very attractive interest rates on other loans.